Corelogic has just released their housing data for the month of July, the moment we have all been waiting for. So if you own or are looking to purchase your next property, you need to understand what is happening in the market right now. I'm going to break down the data and give you insights to what's happening on the market, how you can position yourself, if now's a great time to buy, because things are changing rapidly. If this video brings you value, please like for the holy YouTube algorithm. And comment your thoughts below. I really enjoy chatting with you guys, and we're creating a community here, and I respond to everyone. And subscribe for more awesome content on property, personal finance, savings and investing. Because according to my analytics, 70% of you watching this video have not subscribed, so you better subscribe now. Alrighty, so for the month of July, property prices declined in every major capital city beside Adelaide and Canberra. The combined capital cities declined by 0.8% in July, and the combined regionals was flat with no change. Okay, now let's break it down city by city to see how prices have been affected in your area. So first things first, Brisbane dropped by 0.4% in July, followed by 0.6% in Perth. So I've seen a lot of articles saying, Perth is now bottoming out, but according to the data, it is still falling and there still may be some opportunities to get some discounts. Prices also fell by 0.2% in Hobart. So we're starting to see Hobart has been, a hot market for the past couple of years, but we're starting to see declines now in Hobart, and prices are continuing to fall in Darwin, which has been weakening for the past year with a 0.3% decline in Darwin. Okay, let's now get into the big boys, Sydney and Melbourne, which have been the hottest markets over the past 12 months, with nearly double-digit growth in Melbourne and over double-digit growth in Sydney. Now, Sydney recorded a 0.9% decline in July, and Melbourne, of all expected, was the worst performing market, down 1.2% in July. So Adelaide, the quiet achiever, made a small gain of 0.1% in July, followed by Canberra with a gain of 0.6%. And I assume that's because there's a lot more secure work with a lot more politicians in Canberra and a lot more government employees in Canberra. So it may be affected less than the other markets. So since this decline started, Melbourne is now down 4.7% approximately, and Sydney's now down nearly 3%. And like normally, Melbourne and Sydney fall first, and then it starts to have a ripple effect on the other cities. Okay, now don't go anywhere. I'm now about to break down this data. Let's all make sense of it, and let's figure out, okay, is now the right time to buy, or should I wait next year and finally get that dream home or that investment property I've always wanted? Let's get into it. Okay, now I have to say I'm a bit frustrated and I'm a bit triggered by all the news articles that are coming out saying now's a great time to buy, first home buyers are surging. They're saying, property hasn't crashed like all the doomsdays was going to say it was going to crash by 30%. Hello, it's only been 3 to 4 months. This is only just beginning. And property is an illiquid asset, unlike the share market where it can crash 30% in a month and then recover. Property takes time to transact. It could take 2 years for this slow grind to get to that 20 to 30% decline. Now, like I said, I've been seeing a lot of articles coming out. They're bringing out articles like, property prices over 20 years have gone up 450%. And that's exactly right. But there's been a big fundamental shift in the economy right now. And what's happened since year 2000 to today is they've cut interest rates from the average interest rate being around 8.5% in 2000 to now the average interest rate is 2.5%. But now there's not really much room for the Reserve Bank of Australia to cut interest rates, so they can't use that tool. And also, even though wage growth hasn't been that much, there still has been wage growth over the past 20 years, and now the Treasury is talking about there could be negative wage growth for the next 10 years with the globalization of the workforce and automation and just supply and demand, where a lot of businesses are going out of business, and that's going to bring the unemployment rate up to 10% by year end. Okay, another thing you need to understand is how markets work. The Australian property market isn't just one market. Each capital city has its own market, and each suburb in that capital city has its own market. Now, there's something called the ripple effect. And say, for example, in your capital city, wherever you are, the upper end of the market tends to fall first, And then once the upper M or the premium suburbs become more affordable, people will leave those affordable suburbs and move into the premium suburbs. And then what that does is that then drops the prices in the lower end of the market because people now can afford the premium end, or it's more affordable. And then once the lower end suburbs or the fringe and outer suburbs start to decline, then that has an effect on the regional markets because people can now live closer to the city and they don't need to buy the affordable properties in the regions. So again, they will decline first in the upper end of the market like we're seeing, then it will affect the outer fringe suburbs, then it will start to affect the regions once people can move closer to the city and not have to commute so far. Now, the Australian economy is on life support right now, and what happens in the economy will have some effect on the property market. So I'm going to break down quickly what's happening in the economy, how this is going to affect property prices, and what we should do to position ourselves to get that dream home we've always wanted, possibly in a year or two, or get that investment property and start our journey to wealth. Okay, so like I said, the Treasurer has expected that unemployment could hit up to 10% by the year end. And a lot more businesses are being shut in Melbourne and in Victoria, so this could even accelerate that rate to 10% unemployment. And up to 2 million people are going to be kicked off JobKeeper with the new business testing criteria, which they may change for Melbourne, but they haven't announced what they're going to do for the rest of the country. And also, Job Seeker has been cut from 1,100 a fortnight to 800 a fortnight. Now again, unlike other recessions, they've been able to slash interest rates to keep the property prices going, because for every 1% drop in interest rates, you can borrow around 5% more depending on your situation. So they're not going to be able to use that tool. And also what they're doing with all these first home buyer grants to build, that's not going to increase prices, that's going to do the opposite. Where I live, there's been massive amounts of development. There's been a lot of first home buyers taking up those builder schemes, and there's been new estates popping up everywhere. And what that's actually done is created an abundance of supply of new properties, where 3 years ago, I couldn't find, a brand new 3-bedroom property for under 450,000. But because of all these new estates now built, there's abundance of supply of 3-bedroom brand new properties. And I've even found ones now for 350,000. Also, what they've been able to do to fill this supply of properties is immigration. But right now, immigration is halted, and they're expecting that there could be an oversupply of 80,000 properties. Not to mention, a lot of Airbnbs are coming onto the market with no more tourists or international or domestic tourists. So they're coming on the market, which is going to increase supply. And also, what we've had is the banks extend mortgage holidays to March. But we don't know what's going to happen after March, and there may be some, smart buyers. They may be smart or may not. No one will know, but time will tell. They may try to beat that mortgage holiday cliff in March, and they might start trying to sell, in November, December, January. Okay, if you've made it this far, you're awesome. And if you haven't already, smash the like button and subscribe, because I'm about to drop some knowledge bombs. Okay, so with all these considered, what do I think could happen to property prices? Again, nobody can predict the market. And all these scenarios I'm giving, that is if there's no more intervention, because the government could intervene, give 50K grants to, everybody that buys a property. The RBA could cut interest rates into the negative, and they could, remove stamp duty for investors and overseas investors and just let everyone buy up all these vacant properties. That's always a possibility, although I think it is unlikely. I expect, prices could easily drop nationally 10 to 15%. And in Melbourne and Sydney, where it's been more unaffordable and driven more by interstate immigration because of all the jobs, they could easily fall 20 to 30%. But again, we don't know. That's just, me taking a guess. So you need to be very careful, and you need to start positioning yourself if you do want to get that dream home or that next investment property for probably later next year. If this video brought you value and you haven't already, smash the like button. Comment your thoughts below. What do you think will happen to this property market? And subscribe for more awesome content on property, personal finance and investing. I'll see you in the next one.